Saying yes. Now, can you see the questions, Angel?
Yes, I do. I can see him on the right side.
Okay.
All right,
Okay.
let's get started here. First of all, thank you, Gail, for having me over here in this webinar. Um, Obviously, I'm gonna do my best to cover as much material as possible, so everybody can learn about stocks and options. I'm sorry, my radar screen is hitting here. My apologies. First of all, let's cover the disclaimer. I'm going to lay this for a couple of seconds there for everybody can read it and be clear about the disclaimer. All right. What can you expect from this webinar? First and foremost, um, before going and explain a little bit about what we're going to cover, I want to tell you a little bit about myself and about my trading. Um, in my case, like Gail said, my beginnings to trading started in stocks and options more than 15 years ago. And the reason why I thought it would be a good market for me to trade was because I have a day job and also have another life besides trading. And for me, it was easier to come back at the end of the day to evaluate. One second, let me disconnect here. Long divergence on hold at 2 AER for SPY on 3-minute chart. Please, let me go ahead and this here. Close. 1 second here. Yes. Okay, so no more distraction from the radar screen here. And that's how I started. I started looking at stock at the end of the day. I was starting to look fundamentals, and also with time, I became more of a chartist, understand price points, support and resistance, linear regression. Start exploring into different methodologies in how to trade stocks, and that's how my involvement to trading started. Like Gail said, I also trade commodities and futures, and that's something that evolved later on in my trading career. If anybody has any questions, you can please go ahead and post them if you want. What can you expect from this webinar? We're going to cover basics of stocks and options. Maybe some of you are here looking at this webinar for the first time. Maybe you have no idea, you want to trade, but you don't know what to trade or how to trade it. And I'm going to cover some of that here in this webinar. And I would like to spend some time in the use of the tools, especially the beginner setup tools. We believe that trading is an evolution. I mean, you don't come into trading and do very advanced techniques. You need to build your knowledge base before you can develop better skills to trade more complex strategies. And so the tools, the beginners tools, are made for that to help you develop. And then if you're successful, then you can advance and trade the most complex strategies that the THD teach. I will cover also what type frames to trade. Kind of trader are you? Are you a position trader? Are you a swing trader? Are you a scalper? Position is someone who stays in a trade for more than a month. A swing trader is someone who trades between 3 to 5 days. And a scalper is someone who basically scalps maybe gaps in the morning for the first 30 to 45 minutes, and they're done for the day. So this is very important because as you develop your trading skills, you're gonna find what you like to trade best. I don't recommend, if you're a beginner, to trade every market, every possible way to trade. You need to start developing your skills slowly and learn, and then eventually you can decide, well, you know what, I feel more comfortable to be more a position, a swing trader, or I can be a scalper. But this is something that you part of your strategy plan you need to define. Also, we're going to cover placing orders using the THD beginner setup, and most important, how serious are you of an investor? I mean, if you're here, I'm assuming it's because you're looking for a serious methodology that you're going to spend time to learn. You're going to spend time to and invest an effort in having a structured system to help you be successful about trades. What tools are you using today? Are you using THD tools? What other tools are you using? Are you investing in your knowledge? And also, most important, do you have a mentor or not? I'm sorry, skip hitting here. My apologies. Any questions? So far, so good. Okay, for you guys who don't know what a stock is, I'm gonna cover a little bit about the basics. A stock is an ownership share in a corporation. You can buy a stock or that share anytime. Basically, when the market is open, you can place the right to buy that particular share, and that's basically what a stock is. An option is the right to buy or sell a specific stock or own before specified there and a set price. When you buy a stock, you own the stock. When you buy the option, you have the right to buy or sell the option and that stock. What are the benefits of trading options over stocks? There are several, and again, this is more of a choice than anything else. A lot of people, especially the older folks, are more comfortable about buying the stock itself, having actual ownership of the stock. That was very common 10, 15, 20 years ago. People felt good about having ownership of a stock. The stock grew year by year. They got a dividend, and then they kept for years. So basically, it's for a profit. But also, when the option market started developing, people thought about the leverage factor, and that's the reason why you see a lot of people who trade today using the leverage equation through options. To use less capital, obviously you have a risk, but again, the objective is exactly the same. If the stock moves in one direction and you buy an option to move into the same direction the stock is moving, you should be able to profit, no matter what way you trade. If you want to trade long or you want to trade short. In stocks, you buy a stock and you sell a stock. So it's similar concepts, but the capital requirements differs. In this particular example, you can see, for example, as of 9/3/2012, Apple stock was 665.24, and Microsoft 30.82. Now, if you wanted to buy an option, the September calls in Apple, for example, as of yesterday, was around $15.05, and the September puts, which is the right to sell if it goes down, a little bit cheaper than the call. And the same thing for Microsoft. September calls basically $1.55 by 107. Now this difference is bid and ask. That's a spread that the option is being sold at the moment. Now, with options, one contract of Microsoft September 30 calls, for example, will cost you $1.07 times 100. The options run in contracts, and those contracts are equivalent to 100 stocks. So if you buy one option of Microsoft, you buy the right to own 100 shares of Microsoft at that price. Now, in the case of Apple, and you can see here the difference, that one contract of Apple September calls for $665 is equivalent to about $1,500. I mean, $15.40 per stock or per option times 100. That equivalent to one option contract. So if you want to control 100 shares of of Apple, it will cost you $1,540 versus Microsoft in this particular case, $107. Obviously, the cost of the stock has a lot to do with the value of the options. And when people trade options, they want to make sure that the option price is no more than 10% than the value of the stock. That's a very important warning signal. So here you see a lot of liquidity here, and the option price is to be attractive at the moment. But when you see prices to be more than 10% than the value of the stock, those are options that I personally do not trade, because they're high risk. Now, if you're going to buy 100 shares of Microsoft, you're looking to invest $3,082. Now, if you were going to do the same thing for Apple, you can see the huge amount of money that you're looking to share out to control that many shares, $66,000. So the same, you can control the same amount of shares with an option for a fraction of the cost of owning the option, the stock itself. That's the benefit factor of the option. Okay, and obviously capital outlay is different when trading options versus stocks. And that's what I cover in these particular 2 slides. Now, basic option knowledge. You know, when we are bullish on a stock, we buy a call, and we are bearish on a stock, we buy a put. That's a very basic facts. Now, I personally focus on the right to buy calls or puts. I never focus on the sell side. These are very risky trading, and you have to have a lot of capital available to, in case that the option goes against you. You know, you might end up having the stock put to you at whatever cost, and then you have to cover that obligation. So here you have the right when you buy a call or buy a put. When you're selling, you have the obligation to take that stock at whatever price is put to you. All right. So remember, buying a call, you're bullish on the stock. You're buying a put, you're bearish on the stock. So the option gives you the capability to trade both sides of the market, or long or short. These are a very basic table about options. Personally, and I will cover here in a minute, I trade stocks that are actually at the money price level, usually at the same price that the stock price is at the moment that I'm looking for the option. That's what is known as at the money call or at the money put. Now, most traders, they are very bullish on the stock, might want to save a little money by buying a little bit out of the money. In this particular case, if you're bullish on the stock, and let's say that the stock is at $50, you might want to buy somewhere in between 50 and 55, for example, and you're a little bit out of the stock. It's a cheaper option price, but again, if the stock is moving, you will also make a profit. The difference is that the delta, and I will cover that in a minute, will be maybe less than what at the money call price is. And also same applies to the put side. If you're buying a put, meaning you're going short on the stock, when you're buying, the reverse occurs in the case of the calls. So here, if you're going up, the higher price of the option is out of the money. The lower price is in the money, and the opposite occurs on the option of the put. Now, one of the biggest elements of trading stocks, and again, this is the most complex part of trading options and stocks versus trading commodities and futures. And the commodities and future markets, you're trading probably a lesser number of possibilities. You're looking maybe euro dollar, maybe you're looking at the yen, maybe you're looking at wheat, or maybe you're looking at oil. But here on the stocks, the universe of options are of what to trade is humongous, and here's where it becomes very complicated. How you select your best trading equity to trade. So one of the advantages is that you have many options to trade. What you need to do is narrow the field to a selected few. And to be honest with you, at the beginning when I started trading, it was very complicated. I mean, I spent 3 to 4 hours a day looking to what to trade. There were so many options, and I just couldn't, narrow them down to the most logical options for me to evaluate in a lesser time. So one of the advantages is that there are trader screens capabilities, and these systems are both in TradeStation and multi-charts. You can have that. The beautiful part with the THD is that the THD tools will allow you, using the indicators that we offer, to narrow the options to what to trade based on those parameters. That makes it much easier. In the past, it was taking me, like I said, 1 or 2 hours. Now, at the end of the day, maybe spend 30 minutes looking to what to trade. It's a fact. I can do it that quick. And I will show you my radar screen in a minute so you can understand more or less, what, how I do it. And based on that, I manage, yes, a separate list. In that separate list, I keep the best movers, and I watch them daily. I want to see how they're performing. And I'm a personal a swing trader, and I am in a position 2 or 3 days maximum. And I am not looking for the daily profit to in and out, because my lifestyle will not allow me to do that at the moment. So I basically I'm looking for more in between a position trader and a scalper. I'm in between and to those two, and I'm looking for fewer days movement more than a quick profit and getting a get out for what I just explained. And the radar screen allows me just to keep those there, and I keep watching daily. Some stocks you might find that they're moving, but you're not, the tools that you have are not telling you, okay, it's time for you to go ahead and place a position. And that's where this scanning capability will let you see in advance what the stock is doing, and then when you reach a climax, then you enter the trade based on your tools, based on your business, based on your plans and your strategy. Also, they know, how the best movers behave. The traders, the trade stocks also, they have several positions at the same time. That's a fact. Yeah, and they prefer a smooth-looking chart. This is a very important element when you trade. I mean, if the chart doesn't look good, doesn't telling you that you have a potential opportunity, skip it. You don't need to waste your time. There are many options there that could be better for you to trade. And trade the charts that make sense. Don't push for trades. That's the biggest mistakes that beginners make when they're trading. They feel compelled to hit the button just to get a position to say, okay, I did it. But at the end, what they had in front of them was not at all the best to trade at the moment. So here's where the beginners THD setup can help. My radar screen has over 254 different stocks and indices and ETF. I look many stocks because all the stocks don't move at the same time. Same thing happens with other tools. For example, if you're trading commodities and futures, they don't move all the time. So the beautiful part about stocks is that something is moving one way or the other, and this will allow you to look more options to what to trade. In my particular radar screen, I have on the upper left side, you can see here, I have a list of all the indices that I'm trading at the moment, and more than trading in the actual indices, I'm keeping attention to where potential support and resistance. And I will show you also that in my particular case, I draw lines on the indices. I used to see a potential support that might affect stocks related to the indices as well. And I keep on my radar screen a market direction. I keep 3 indices there that I'm always watching: the DIA, the QQQs, and the SPY. And then below that, I have a list of different stocks that I'm watching on a continuous basis. And what you see on the right-hand side is, some advanced tools that THD offers that for advanced traders could benefit from them. Any questions? I think we're good. Now, coming back to daily setup, I'm going to look for an intermediate chart. For me, the intermediate chart is the 240-minute chart because it's somewhere in between the daily and intermediate time frames. In this particular case, if you look on the left, you see FSLR. FSLR, obviously, based on the look of the chart, is in a downtrend move. But now it's hitting a resistance point close to ATR. The weekly shows that it had broken the ATR, and then the daily is showing a pullback from the weekly. And subsequently, the smaller charts also showed the breakdown of price on that from the midterm chart. In this case, I'm sorry, from the weekly chart, and you will see it reflected. So here it's very important that before you move forward, you need to be clear. What are you trading? Are you trading the high time frame, or are you trading the smaller, the mid or smaller time frames? What are you comfortable trading? Are you willing to sit in a position for 3 or 5 days as a swing trader based on this, or you basically are more comfortable trading in a smaller period of time because of market uncertainty, or maybe because of your capital requirement, or maybe because you feel more comfortable trading in that environment? It's up to you. So the charts will tell you, where the price direction is. Now, for me, again, I'll focus on the daily, weekly, monthly time frames for general direction. And I personally will enter a trade by using a smaller time frame. I trade within the 15-minute or the 30-minute time frames as an entry point based on higher time frame setups. I follow a watch list of stocks with daily ATR, and this ATR is not the ATR that THD uses. This is average true range, how much price move in a single day on a stock. Some stocks have an average true range price movement of $2 or $3. I tend to look for at least a beta 1.5 to 2 high volatility stocks that move in that price range. Now, right now, the way the market is, with all this uncertainty, a lot of the stocks that I'm having my radar screen, the ATR is not as high as it was when the market was moving more widely during the last before this injunction. But again, there continue to be valid stocks to trade for the obvious reason. This had a high ATR in the past, and I think after the market resolves its current situation of uncertainty, it will continue. The volatility will come back into these volume stocks. I look for stocks with a minimum average daily volume of 500,000 stock trades daily. And again, I look for stocks with a smooth-looking chart. I will not trade anything that's choppy at all. Here is where you can be hurt because there is no direction in the chart. So if there is no direction and there isn't choppiness, you don't need to do it. There are many other trades, other setups there that are more nicer looking, more appealing to trade than those. I also keep track of earnings reports and other relevant news about the stocks. Probably you're aware that right now, actually this over the weekend, there is news about that many well-known companies are planning a potential bailout from the Greece, from the euro. So there's a lot of contingency plans by companies like Pricewaterhouse and well-known financial firms to have their clients exodus from the eurozone. So this news will definitely affect how the stocks will move. And if you notice over the last 2 or 3 weeks, the stocks are moving a very narrow range, and obviously because of the Bernanke effect, because of the eurozone effect. So, when markets are like this, you don't really, and if you're a swing trader or a position trader, it's not the right time to be in the market. You probably want to have these issues sort of clear themselves out, and then when you have more movement on the stock, you want to come back in and trade. So you got to be aware, at least on the stock side, very aware of what's happening in the equity environment, because all of that have an effect to how we trade, and also to commodities and futures as well. There's no immunity about what's happening globally. So if you find that there's a lot of negative reports, or there's pending economic information out there that could affect your position, just take that into consideration when you place your trade. Okay? And that's the reason of the importance of keeping an eye on what are the relevant news about the stocks and also about the market. It's both equally important. And coming back to the option equation, if trading options, you want to look for delta close to 50. The reason being is when you buy, let's say, at the money call or put, and you see a high delta value, that means that every time the stock moves $1, your option will increase in value by that delta. So you want to trade stocks that are 50 or near 50 delta. So when the stock moves into one direction, your delta will obviously enhance your profitability in that sense. You don't want to trade at the money position and your delta is 15 or 25 or 30. The stock needs to move quite a bit for you to benefit from the delta effect.
Angel, we got quite a few questions, hon.
Okay. I'm looking here but I don't see in here. Let me see here. 1 second here.
Okay, I can read them to you. The first question I answered, is this being recorded? No, it's not, but Angel will be recording videos, and they will be posted on YouTube, on the website, and the community as well. Arun wants to know, he owns Facebook from $34 and cannot sell until December 12th. How can he protect using options?
Repeat the question again, Gail. I'm sorry.
He owns Facebook from $34 and cannot sell until December 12th. How can he protect using options?
All right. I mean, if the ideal situation would have been that at the time that he bought Facebook, he would have bought options or puts to cover the downside risk. Unfortunately, when Facebook came out, there were no options available when it did. Options were available a few days after the fact. So right now, if I'm not mistaken, we can look at the chart. I think Facebook is trading right now $19. Correct? I will look in a minute. At this particular moment, Gail, I mean, what he could do is, technically speaking, we need to look at the chart. If the chart is about to show indication that it's going to be bullish, I will buy calls. Maybe I will buy calls that are 2 or 3 months out to cover him on the upside, and then buying puts also on the downside. So you can buy both calls and puts on the same stock. So if you go bullish, if the stock goes up, he will make money on the call, and if he goes short, the stock also will cover me. One will protect the other. But I need to look at the chart more specifically to give him a better advice. But in reality, when you are in this situation, people who own stocks will buy puts to protect their equity value, and what they do is they buy puts and like insurance, and every 2 or 3 months they roll over and keep the option there just to protect them in the case that the stock will either go down or for a profit movement on the upside.
Yeah, you've got a potential magenta peak coming in on the 135, and I was thinking the same thing.
Right. So in that particular case, I would rather see in the 135, look at what's happening on the 240, and if it's going to ATR, or you have like an advanced, like I say, like a Buddha trade set up, I would buy probably a call.
Okay.
Or 2 out.
Wepper wants to know, what do you mean by a daily ATR of 2 or higher?
Average range is how much stocks move in intraday. Stocks move 50 cents an average daily movement, or they move $1, or they move $2. ATR, average range of the dollar value of the stock daily. So you want to have stocks that move well during the day. You don't want to trade stocks that are moving 50 cents per day. If you're a position trader, yeah, I can understand you hold them for the long term. But if you're looking for a swing movement for 2, 3, 5 days, you need momentum on the stock in order for you to make profit. If the stocks move 50 cents a day and you want to be around in 3 to 5 days, you're not going to be able to achieve your profit potential. So you want to have stocks that are very, very move strongly day in, day out.
Okay.
This is not the ATR we use in THD, of course, yeah.
Right. Now he says ATR is in dollars, correct?
That's in dollars, correct, yes.
Yes. Okay, Perry says, do you think commodity trading is so much simpler with same profits or better? Well, I think the one thing, Perry, is that we're branching out so that we're not just doing commodities. So when commodities are sitting still, we can still have trades in other markets. So what's your opinion, Angel?
Look, my policy, Gail, is I trade. I'm keeping my eyes in many markets. You know,
Exactly.
you have to have your options open, because what happened is maybe today we look at the options for trade stocks and there is nothing there to be traded. But if I go to the commodity, something is moving. So the tools will give you the capability to branch out and trade other markets. And as a if you are a trader and for a living, you have to have as many options in your table as possible. So maybe for many of people that come into this webinar, they're more comfortable trading currencies and futures, because obviously that's what they have been able to explore. But also there is this market called equity market that's still also interesting for many, and also provides same sort of potentials than the others do. And I think is that we have had, if you will know, over the last few weeks, very low volume market in equities, also in futures. So what happened? You might have an opportunity to trade one future or currency, but also you also could have traded something else on the equity side as well. Diversity plays a role as a trader, as trades get more well balanced with the markets. And I think we need to be able to trade everything that is out there. And again, this more, I will only recommend that if you to do that, if you are well prepared and understand well how the market moves. It's I'm going to trade because it's moving. You need to know the intricacies of each market. But for me, this is how I started with stocks and commodities. Then I'm sorry, stocks and equities. Then later on, I ended up getting myself involved in the futures and currencies. But this is how all it started for me. And I feel comfortable with this market. But it's about more or less a personal choice more than anything.
Yeah, but to me, it's sort of like, do you just sell a hamburger, or do you sell a hamburger, fries, drink, and milkshakes, and ice cream cones too? You make more money if you expand. So, and I think that sort of answers your question in a more simplistic terms.
Right.
So, now, Bill, you said why be concerned with earning reports and other news when really you are trading what the chart tells you. You can't rely on what the chart tells you if you've got a major report coming out. The same thing applies to futures. When Bernanke speaks, you're not going to see me in the market just because I threw an ADX peak. I mean, you can't do that because that's an emotional reaction, and the chart does not read the emotional reaction from a market report. The same thing applies with earning reports. Okay.
I think what has helped in one way also have hurt the other way trade the markets. I think information. We're much information driven nowadays. Anything that is being said anywhere in the world will have an effect how or why a lot of these trades, whether equities or futures or whatnot. And I think it is money moving one way or the other. The electronic trading is also an element. But news, I would say, is the most, especially when you have these high value news, like a Red report, like a Bernanke speaking, like a Draghi speaking. Those cannot be taken for granted.
Yeah, that's not based on technical analysis.
Exactly.
That's how our trader is going to react to this news.
And also, Gail, it's not only us, the small retail traders. These are the professionals also do not trade when there is something going on because they don't know.
They have more experience.
Exactly. And they trade much more than we do, of course, and many more contacts. They're not going to get in a position when they have no confirmation to what that news will be. What would you?
I know. Let's see. Now, some of you are confused, I can see by the questions about the ATR. Let me explain. The THD trend has an ATR built into it that is pretty much, it does a average of the price for the last 9 bars and then calculates an ATR. Angel is talking about looking at an ATR on a daily chart, which means you're looking at the average true range, which is based on high minus low, over a specified period, and it is giving you how much does a market move over a specified day.
Thank you.
Now, although the THD has an ATR built into it, if you put it on the daily chart, would you get the same thing on the bar range? Yes, you would. Okay, but it depends on what your average is. So, I mean, they're similar but not similar.
Exactly.
Okay. George wants to know, what is the major differences in trading options on equities and options on futures?
There is no fundamental difference. However, the element of the management element, it remains the same. And I mean, there's no difference at all. However, I see the value of options on stocks to be more accessible to many than futures, for example. So all depends what are you trading? Are you trading gold? If you look, I have not checked options on gold, but I don't think they're going to be cheaper than buying options on let's say Facebook or those low value or average value stocks. That's the fundamental difference. And also, in both options, whether you trade commodity options or you trade future options, you can roll over your options. You can close your position and move forward to the next time frame you want to trade. In options for stocks, for example, you can buy as far as 6 months options ahead of time. You can buy a leap, which is stocks options that trade 5 months away from current price levels. And I'm not so sure, and this I need to verify, I'm not so sure you can do that with options for equities. And this is a question, I'm sorry, for future. This is a question we need to ask Rick or Mika in this particular case. But I never trade options on futures on that, so I cannot tell you more about them. I know more about the option side on equities. But it should be no different at all in the sense of how you manage the options, how you place the option orders and whatnot. Should be the fundamentals should be exactly the same. But what other elements are behind on the currency on the future side, I'm not able to answer the question beyond that.
Okay, for option trading, it's all about margin. Stock options can give more leverage without having big margin commitments. Downside is implied volatility can make the slippage heavier than a straight commodity trade via futures. Okay. Rick says, as Angel explained, he is a swing trader because his day job does not allow him to sit in front of a screen and trade futures as a scalper. Also, it allows you to diversify and keep more of your money working for you. That's the portion I like about it. True, if you are in a long option position and news earnings come out and the stock drops, you will still lose unless you know how to adjust the position. Also, most option premiums go up in anticipation of earnings, and after the earnings report, the premiums come down a lot. That's true. The volume in options on futures is often less against options on stocks. I didn't quite understand that one, Wepper. You're always muted by the organizer, Perry. The only people that are allowed to talk via microphone are the presenters. So, okay, Angel, go on.
All right. 1 second here. 1 second here. All right. 1 second here. All right. Here's a good example of what how the tools can help you trade, whether you're a position or swing or a scalper. Let's come back to this setup for a minute. This the first thing I look at any stock. I want to see how smooth the chart is, and then from there I go into a smaller time frame to look for an entry point. If you follow, for example, the THD beginner setup, right here in this setup, you see no entries at the moment. Okay, the beginning setup requires you have a yellow dot for entry point to enter a long or short position. Right here, you have stocks that move very well, but you then need to go ahead and look downward to where your entry opportunity might have been. And when I was looking at the stock, and here's the stock that if you look on the left side of the screen, FSLR back in 2011 was a stock that was trading around $159. And now, as a reason, we see the stock coming back and start moving upward in value. However, between the movement from the higher time frame, from the smaller time frame, you're gonna see this tendency of swinging all its way up, because we need to remember that none of stocks, no equity move linear. They tend to oscillate, and these setups will allow you to understand, when potential entry point will come to you. In this particular case, even though that we have on the weekly chart an upside movement, you have a magenta peak on the weekly chart telling you that the price on the weekly chart giving you an indication that you're going to have a pullback to ATR. Now, even though you have a weekly you have an upside movement on the price, when you look right below, the trend is red, which means they're not coincide. You will not trade this stock long on the weekly setup because your trend is telling you the trend continues to be down. As you move to the daily chart, you see also that price give you a magenta peak on the weekly, and price broke the ATR and is starting a downtrend, and that is supported by THD directional bar at the bottom. And however, look at how big the price was in that when it broke down. Huge breakdown of that ATR. So as I see it right now, you want to see price come back to ATR, meaning move up, and eventually continue his trend if the trend is downward. And you can see that on the 240 minute that you have another ATR forming on the right hand side. That is definitely an indication that price will likely go back a little more to around the $23 range. And if the trend continues downward, we will bounce and will continue his downtrend. Now, where do you enter this trade? And as I was looking at the charts, I came back to the 15-minute chart. Stock traders, swing traders, look at the 15-minute and the 30-minute setup for entry. They don't go into a smaller time frame because they tend to be a lot of noise. And when the setup came for this trade, it came in on the 15-minute chart. And if you look where it had the dotted line, the vertical line, that's where the entry came in. And the reason you cannot see it well is because it's a lot of data and I couldn't fix it into the trade. But here you have high volume, you have the RSI moving downward, and you have the ADS moving up, and the trend indicator below, red, also giving you the direction of the trade. So if you would have entered this position right here, you would have been in profit based on this setup. Now, when you look into detail, here's the more clear picture. You had a yellow dot based on the beginner setup, giving you indication. Hey, the stock has given you entry indication. Then you would enter the trade on when the yellow dot, and the stock movement would have eventually worked out itself based on the setup. Now, that move itself was around $5.07, and that's basically in a 2-day movement. Now, the THD beginner's rule set did not give you an entry point on the high time frame, but in the smaller time frame, it did in the 15 minutes. So sometimes the reality is that we see movement, strong movement on the upper side, but we tend to ignore where below there may be the entry setup. So if you're looking for a setup on the high time frame, a yellow dot, it might never come for a while. But the 15-minute chart here is telling you, hey, here's your entry position. You can go ahead and enter at this moment. Okay? And one of the key benefits from the THD tools is that will always give you for the lowest risk entry point. So let's assume that you got a yellow dot at this in this particular stock, and you enter a put. what is your risk point? Your risk equation, very close to price. So if you put a stop right there where above the yellow dot, you're gonna be protected very well against this stuff going against you. So this is something that the setups, the beginner setup at least, will give you that heads up ahead of time. And one of the beautiful things about our tools is that no matter what tools do you use, they're always based on high probability trades and obviously keeping the lowest risk entry point. That is something for me very important because in the past, when I was scattering around looking what would be the best setup, it was all hypothetical. Well, it should be around here, but where is the entry point? Give me an exact entry point. Is a pivot high, a pivot low? And no one could have given. I didn't have the capability, nor did I have the tools to give me the best probabilities to enter the trade. And here's where the tools, I think they're magnificent in that regard.
Angel, Frank wants you to review the trade again quickly.
This one here or the larger time frame?
Frank, is it the larger time frame or the actual trade itself? Just a minute, I'm waiting on his answer.
I'm sorry.
The actual trade.
All right. And this, if I come back to these higher time frames, first thing I see a smooth chart in progress, but not what here. I see an entry point based on the beginner's setup. Correct?
I think we're on the wrong chart. I think you're still. There we go.
Okay. On the beginner setup here, we're looking at on the 15 minutes. We want to see a low risk entry that is indicated by the yellow dot above the white line, the vertical line there. When price touched the yellow dot, that's where your entry point began.
Do you understand that, Frank? The yellow dot would be your entry. The red dot is your stop. Okay?
Right.
And real quickly, I want to review somebody else's question. Due to the wider bid-ask spreads in options, do you think it is even possible to scout the market using options? I think it depends on your experience in the stock. Because number one, George, stocks are a lot like Forex. You have that bid-ask. So the higher the volatility, the higher or the wider the bid-ask spread is what I noticed. And so that's actually encompassed into the average true range. For example, if you have a stock that moves $5 a day, you might have a wider bid-ask. It might be 50 cents. Could you still scalp that? Yes, if you have the experience, you can. But that's going to be a key factor is your experience level.
I will look for bid spreads no more than 25 cents, and that's high. 10 to 15 cents, if you trade the QQQs, you trade high volume stocks, the spread, the bid and ask on options, they're very, very tight. Very tight. Even with a with a YATR, it should be very tight because of the volume. When you see the stocks trading less volume, that's the spread gets really bad. And I do that on purpose. So you can pay more for the option, and even though the volume open interest is very small. That's another element here. When you trade options, you need to keep eye on the open interest. How many options are being traded for that particular price level for the stock? So I want to make sure that you never hold, or I never hold 10% or more of the current open interest in any option. That's very important. Never get into a position to own more than 10% of the open interest of any option. Never. That's a rule, a very common rule that everybody follows. Try to be less than that.
Okay, so Frank is saying, so on the higher time frame, the 240-minute and daily were down. So we entered down on a 15-minute. But if we were looking to go long on a weekly, we would have to wait for the 240-minute and daily to be long.
Exactly.
Okay. Implied volatility is highest in at-the-money options. So if you buy at-the-money options, if IV flattens, your stop might move, but the option won't. Is that correct, Angel?
Um, honestly speaking, if you have a high, if you have high volume stocks, I never, to be honest with you, I never had any situation like that before. Um, I never had any problems getting filled or stock being affected by that at all. I mean, I don't know what particular stocks are we talking about, but I never had any issues. With the gentleman's asking. And as a matter of fact, is the swing traders, because we're in a trade for 3 to 5 days, we're looking definitely at two elements: open interest and volume. And usually, if the volume is high, the open interest high, and the delta on that stock, on that option is, let's say, 50 or better, and you have high ATR, the stock will move and you will make money. I never seen it work any other way than that. The question is, how long are you in that trade? If you're looking for intraday, you might see an option going flat, but when it starts moving $1 or $2, the delta will kick in and it will actually, will get you into a profitable position. And sometimes I've seen trades, for example, in which I see options being flat, but then boom, when when price move, the delta effect will kick in, and I'm in profit. But I never had a situation like he just mentioned. At least not me personally. I'm not saying it doesn't happen. So again, here's an example. You have a nice smooth chart trading on the high time frame. There were no setups there based on this beginner setup system. Well, then it doesn't mean you stop. You continue to look at the rest of the charts, and then find the chart that is giving you, based on your rule set, an entry point. Now, this stock here, in trader, the general trend, coming back to the presentation here, is on the downtrend. Now remember, this chart already play out the move, but
on 3-minute chart.
Play out the move. But in reality, around here is when this move took place. So you knew the ATR was in effect. You knew the price was gonna go down. But in this, because the rules for beginner setup will not allow you to take this trade from the daily time frame. You could have go down to the smaller time frame and find an entry point. And here's what it did. You always can find an entry point if you go to the smaller time frame. Now, is a 15-minute time frame a trade frame that you want to trade, or you prefer to have an entry point based upon higher time frame here? It's up to you. What kind of trader are you? Are you a position or are you a swing? Swing traders will take this trade. This trade took 2 days to develop. You would have been in profit. If you are a position trader, you don't have a setup here. Only you use advanced THD methodologies. And but based on the beginner setup, you don't have a trade here. Yet. Only if you trade counter trend. Then moving forward, what kind of, where did I get my information? I mean, where people ask me, oh, well, where do you get your stock swap to trade? Well, look, the internet is the best source. I look into finviz.com. I look in Money MSN. I look into financial.com. I look into briefing.com. I look at marketwatch.com. And basically what I look are for stocks fundamentals that when the stocks have traditional good earnings, they're usually stocks that usually tend to move well. I look for any relevant news just to keep an idea of what is happening. I don't get hung up on the fundamental as much as I used to years past. Now I like more the chart tell me the big picture. Then if I need to know or I want to trade a stock, I go and check if there's any news out there that I should know. Is the earnings going to be worse than expected? Is the company planning to buy another company, or is being sold, or having issues with market growth? That I can go and search in these sites. But basically, the stocks that I'm pulling are stocks that I built over the years that I put into my radar screen, so they have tend to move well throughout the years. Obviously, right now, as I said, the stocks market is really not moving well because obviously all the relevant news out there. The global economy obviously is putting a lot of stress on the equity market, even though the market has moved up. But is that move gonna held up in the next couple of weeks? The tendency, the people are saying, the expert says that all depends on what's gonna happen now in Europe. Even though the U.S. economy tends to be in a somewhat better position at the moment, what is the effect for the effect that Europe will create? We don't know. I think it's gonna have an effect on the stocks, but how? We need to have the news play out first, and then evaluate stocks and see, you know, what the chart tells us to do. And I think I invite all of you guys to come over if you have not signed up for the seminars, you know, to make this investment. For me, it has personally helped me a lot. I don't trade every day. I'm not a day trader. I don't have the luxury to sit on a computer, like Fran said, all day long to trade. I have a job. I have a responsibility aside my trading activity, but I trade also for improving my retirement proposition. So and the tools are giving me better visibility on what to trade and how to trade. I'm not spending hours guessing, okay, I want to trade this. Well, what is behind it? What tool set have you used? What kind of business plan have you set? What kind of rule are you following? What is your mental mindset at the moment? These are all elements that are very important in a traders, no matter what they trade. And for me personally, Trade Help Desk and the tools that Gail has prepared have given me an edge without question. So I invite you all to come and explore the tools. If you're a beginner trader, I will definitely consider the beginner setup, at least for to start with. And as you advance as a trader, you know you can move up into your more difficult trade setups and so on. So you know, I will not delay this jump if you're thinking into developing as a trader. I think this is a good opportunity, and there is no one else who can provide this tool setup anywhere. I can tell you right now, I spend a lot of money and look around many traders offerings, and by far the level of service and support that the team have are second to none.
Okay, Riley wants you to explain how you set up and use the radar screen to scan for good stocks.
All right, give me 1 second here. Let me trying to. Okay, 1 second here.
Well, thank you, Evelyn. Evelyn says, I totally agree that these tools will be very helpful in trading options. Timing is everything, and these tools work very well for timing a trade. They really do, and I know we've been hearing the ADX going off on Angel's screen all morning. It's ADX peak here, ADX peak here, and that tells me there's a potential entry point coming up on a 15-minute. As long as you were trading in the direction of the higher time frames. That's the reason we added that alert not only in the radar screen but also on the chart.
ADX peak for IBM on daily chart. ADX peak for UNH on daily chart. ADX peak for UNH on daily chart.
Sorry for the noise.
Not a problem.
ADX peak for REDU on daily chart.
All right, here's my radar screen populating at the moment.
Is on daily chart. ADX peak 4 a.m.
Look at the Christmas tree, I'm sorry. Now let me show you here. Let me go from top to bottom. Here I put all the indices that are relevant for me to look at. And if you look on the description, I usually in my radar screen I have it listed. You know, the ultra short QQQs, the NASA composite, the housing sector index. These are all important sectors that in the equity market everybody tends to pay attention to. So I do the same.
For JCP on daily chart. ADX peak for KDCC on daily chart.
And here I look for direction on
daily chart.
Let me the radar screen stop 1 second. Then I have market direction, Dow Jones, QQQs as a SPY. As you know, right now the market is down 101 points. And before I show you the charts and what I do with the charts, my radar screen has some advanced tools plug in. And what I do and what it has me to trade are basically 4 elements. I tend to sort my scanners based on high and lows. I look for gap in the prices, and then I also sort based on the tool set. And I look by high ADS value, I look by ADS peaks, and I look for volume divergence, which on this market, the divergence, or actually in any market, divergence toward SMA or toward ATRs are a must-have. You need to have these tools to look for counter-trend trades, to look for assumption of a major trend. These tools definitely are going to give you that heads up as you place your position, whether a position trade or your swing trader for that matter. So what I do is basically I list my stocks. I let the radar screen do the work for me, and then I come back and start looking for stocks. In this particular case, in my radar screen, I have a scalp area open just for fun. I don't scalp in the market at all, but I just leave it there just for explanation purposes. And then I have a swing trade window here that I want to put the stocks that I'm watching all the time. And how funny, today we got a peak on this particular stock. We're going to go back in a minute. And then I have my rest of my watch list, and I have all the stocks that I follow. I mean, you look, and let me show you to the end so you can see how big this list is. Don't fall asleep. You look about 247 stocks, 247 including Facebook here. We're going to go back to gentleman's question in a minute. And then I have all the key sectors. Here where I have the ETF. And if you're following commodity, you're following global developments, this ETF will give you somewhat of a share, an idea of what the market is doing abroad, here in the US as well. Okay, and especially the sectors, semiconductor, telecoms, and others as well.
Okay, I'm sorry, Angel. Someone's asking if this is covered in the courses coming up. The one in September, no, Perry. It starts at Master the Trade, which is our basic level. Then this is covered at the advanced. Most of you heard us say that, this is more advanced because you have to know the tools in the time frames before you can add stocks and options and all these other markets to what you're doing. Okay?
Now, let me to supporting what Gail says, we had, for the beginner setup, we had for advanced trades, we can definitely show you what to trace these setups. But for the beginner setup, this is not a recommended entry at all for a beginner trader. If you don't know how advanced setups, you have no business trading these markets as they are. Most of the guys who have taken the advanced courses, we can trace these setups. But for a beginner who's starting with a maybe small capital and they're working on the fundamentals, will not recommend trading these setups. Even though that it looks like a nice movement, but you have not entry at all at the moment. from the beginning setup perspective. But if you go down to the smaller time frame, like I said, you had one here. And I think that's very clear.
Okay, someone else wants to know if you use TradeStation for your order entry or just date and scans.
I use TradeStation for my order entries and for scan search, for both, for equities.
Okay, now you can go back to what you were teaching us.
Okay, so basically what I do at the end of the day, I come back to my computer, I turn the computer on, I let this sort, and then the works begin. In this particular case, I have here some stocks that I put in last night for the purpose for the presentation. And let's go ahead and let's pick one, for example. In this one here, you have 50 ADX value, you have EMI of 30, and you have a magenta peak of 10.8. Let's see what the stock did today, or at least this morning. 1 second here, let me pull the stock here. Now let's look this together. From a beginner setup, this magenta peak is the one that a radar screen is showing right here. Correct? And based on this, on the beginner setup, we would have wanted the stock to touch the yellow line and create a yellow dot to have an option to go long on the daily. However, that has not manifested yet. So based on the rule set for the beginner setup, you have no trade at the moment. However, on the daily, but if you go on the 240-minute chart, let me change my input here because this is the chart that, 1 second here. Sorry here. If you were trading the 240-minute chart,
Magenta peak
you had here an entry point
chart
on right here. And it was validated. Actually, I'm sorry, move here. Sorry, right here. You got a yellow dot. You got the trend validating the direction of the trade, and you could enter this trade based on the 240-minute chart, and you already would have been in profit based on the tools. So the price movement, just give you an example. In this particular case, price moved 55.67 to 58.16. Now with an option, let's look, because I know that you guys have a question, what the option will look like. Let's go back here. We see the price. This is at 55.69 price entry point, correct? And we would have traded probably 1 month out. Another thing that we do in the teaching the advanced seminars, we teach you what kind of contracts to look for. Now here, the radar screen, we look at the 55 calls, and if you look over here, look at what happened with the 55 calls here. This stock, the delta 70. Look at the open interest, 5,400 options being traded. Look at the volume. So that stock moved this morning in your favor.
Frank wants you to start from the left of the radar screen and tell us what each column you are looking at does. Do you run it on different time frames?
No. What I do here is on the option contracts, you look, the options being traded on a weekly setup, on a monthly setup. On the weekly setup,
Honey, I'm sorry. He's talking about your radar screen.
okay, here, right? I'm sorry. My apologies. One
Not a
second.
problem, dear.
1 second here. 1 second here. My apologies. 1 second. Let me go here too. Okay. All right. All right. Frank, question. He wants to go from the top here?
Yes, from the left, the high-low pivots, the gap, the THD, ADX, and all that stuff.
Okay. What I do is, and again, because I'm still developing as a good chart reader. It's something that's a work in progress for me, no matter what, no matter how much I know. I like to see people's highs and people lows. That gives me a good idea what a potential support and resistance are. And let me show you in a chart. For example, let's pick here. Let's go here and let's do, for example, Apple. No, let's pick Apple here for a minute. Just to let's look for something that people most knows. Mostly knows. 1 second here. Where is it? Okay. One second here. All right. So in that radar screen, you have here Apple, and obviously it doesn't show. But let's look for someone that shows. Let's see here, for example, MOS shows a pivot low, correct? 56.48. That's when the pivot low is formed. So then I go here to the chart, and on the daily, this pivot low is listed. 1 second here. I need to check. I think that's a weekly pivot. 1 second here. No, this is a daily pivot here. 1 second here. 1 second, please. 56.48 most. 56.48. Okay. All right. So right here, here's the pivot that the radar screen is showing, if I'm not mistaken. 56.48. So basically what it does to me is it allows me to look for potential support and resistance on the chart, and makes it easier for my drawing process. So if, for example, if I have a stock and I see a potential resistance on the downside, I come back here and I draw the lines on these pivots, highs and lows. Okay, Frank? More or less for a visual perspective. Honestly speaking, is something of choice. It's up to you. When I see a pivot forming, it could be a potential bounce. In this particular case, when this pivot form here, it came back and tested, and it's again moving back on the upside. And here a potential resistance as well. Support and resistance. That's how I use the pivot highs and lows. No other element of use beyond for visualization purposes of potential support and resistance areas. Then on the radar screen, I also go for gap prices. You know, what prices have moved up, have moved down. For example, let's look here at WLT. I go back to the chart, 30.42. So let's go to the chart here for a minute. This price moved this morning, and on the daily, even though you don't see it small, you don't see that big, here is a gap. Between these two prices is a gap. You see? And the reason why I pay attention to gaps is because gaps tend to be filled, depending on what kind of gaps you're looking at. And also like to pay attention to those, especially if you're trading either counter trend or you're trading in the direction of the trend. This gap, the way it looks to me, and it's manifesting, is a continuation gap. This gap most likely will continue to move down. And if you look on the 240-minute chart, it's a very smooth. So the tendency of this, my opinion is at this moment, is that the stock will continue to move downward until high ADS value is manifested here in this intermediate chart to the contrary. One second here. There's something else you need to help me to fix it. Pre-market. Now, very interesting. You have here this gap, price is moving down. You get in a high ADS value here, already in the 240-minute chart. So there's a high probability, if there's a magenta peak form here, you also have a high ADS RSI value, that this stock will retract and bounce from ATR or revert on itself. But by looking at the higher time frames, there's still some movement on the downside from these 3 time frames. You have 57, still not high as 70. 55, still not high as 70. 64 on the monthly, is still not high as 70. So there is a probability that this stock will come back, bounce from ATR, and will continue his downtrend movement. Any questions? That's the reason for me why this chart is very important.
We do have one more question. He says, are all of your option trades directional? Do you have delta neutral trades or volatility trades as well?
Directional. And for me, are driven by high ADS values, if I'm trading counter trend, or they're bouncing from my ATRs on the direction of the trend. The problem with counter trend plays on stocks with our setups is that you can have very high ADS values in a high time frame. And in fact, a good example, let me show you one right now. This is the one that is most spoken about by everybody who trades nowadays. Let me give you an example here.
Let me guess what it is.
Yes, you know the answer to that one.
I do.
What is it?
Wepper, you said the daily magenta peak is showing me it's going down to the ATR. Why are you long? Because they had already formed support, Wepper.
All right. Now look at here, a good example. Here's where you need to pay attention. You have here Apple, Gil's preferred stock, or fruit.
Mm-hmm.
And then look at here the ADS value on the monthly chart, 73. It had formed a magenta peak, it formed a pivot high, and just continue long. However, when you look into the small medium time chart, you see that it's breaking down slowly. However, will you go short on this stock? I will be very cautious. I want to have more confirmation from the midterm charts to take this stock short at the moment. In fact, look at this. What happened in this stock, for example? You have here a dot on the RSI, even very small dot. It pulled back price back to ATR. Look at where price is sitting on the daily chart. This is another element of what you need to pay attention to. You need to draw this all of your charts. Look at where price is right here. Even though he has not touched the yellow line, it's very near. And look at what the ADS value here. Look at the overall trend continue on the upside. Would I want to go short? I don't think so. Not for long term. Am I scalping intraday on the chart side if there is element of value? But right now, the way these charts are looking, I will not trade this at all. Not at all.
Larry, you're asking a good question. You're saying, does volume divergence on a monthly worry you on Apple? The monthly divergence just tells me they're going to test for sellers. And when they tested for sellers, there was no interest. So it's going to go back up.
Right. You have this taking place, but remember, it takes 30 days to move on with these bars. You want to go against it at this moment? What happened in the day number 15? This this ADX goes down to 68 and then goes back up again. It could happen. So for me, this is good to look at, but I will pay more attention to these two charts if I'm a swing trader. These are the two charts that for me are the key elements of the trade right here. This is how it tells me for the 3 to 5 days what is the tendency. But here's a very important point. If you are chartist, look at it. You got a bearish bar here, but you got a volume. Right here you're creating a divergence at the moment. So there's a probability the price will go back to ATR here. But it will happen when? I think you want to have more confirmation from these charts to confirm that it's going on again, to bounce back from the ATR. And this is if you're trading counter trend.
Yeah, but it's not going to, because the daily is showing you that the sellers are not entering the market.
Exactly.
So if sellers don't step up to the plate, guys, it's going to go up. Okay. Sellers have got to either absorb all the buyers, or they've got to step up and say, okay, we don't believe in Apple anymore. It's overvalued, so we're going to just start selling it. You're not seeing that type of action right now. The volume's not showing you that.
And also there's another element. Someone was asking about news and about earnings. What's happening?
Don't they have the iPhone coming out this month?
They're talking about iPhone 5. They're talking about the new iPad mini. So my assumption is that this will break on the upside. And in fact, you see here a potential zero-line reject forming on the 240-minute chart. It could happen. It could bounce and continue up. In fact, if you look where price is sitting right now on the daily, this could be an indication that this will be broken on the upside. But then again, would I bet on it at this moment? No, I need to have more confirmation that this is a particular case. Right now, if I'm going to go long as a swing trader, I want to see this. I want to see this sort of behavior from this chart first. And right now, I don't see any indication. And in fact, it's reinforcing at the moment a reversal on these charts. But also pay attention to what the market is doing. 103 points down today. And also remember, Apple weighs heavily on NASDAQ. So when Apple moves, NASDAQ will move almost in tandem. These are some of the things that you need to learn about trading stocks. Then trading maybe currency or futures, you don't have to pay attention. Because basically you trade the issue itself. Here you're trading other elements of the market. Now this is a smooth chart. This is what you want to see when you trade. You don't want to go back and look for examples. Let's pick another chart here. Let's go Netflix, for example. This is a good example, but this more or less right now already the movement took place for advanced traders. Probably here people are also going to look also the gap plays. But I want to see a chart that is not as nice as this one. Let me see if I can find one here. Let me see here. 1 second here. Let's pick Ace. You want to trade this? Definitely not. This is what the tools also help you look at. This makes no sense. You shouldn't be trading this kind of markets. Not at all.
It's horrendous. Frank wants you to continue with your radar screen.
Hey, Frank, better stop it. Just kidding. Okay, Frank. So what is Frank's question about the radar screen?
He wants you to go through all the columns and tell him what it's telling you.
All right, here's what I do. Okay, people highs, people lows. It's very clear. Gap up, gap downs. It's very important because I want to see, what is happening. Is this a running away gap, or basically this is what kind of gap it is? I don't go into the details of gaps, but I want to see what's happening when they move, because you have probably when you do this, when this happens, you have probably a potential magenta peak forming somewhere, and the mid-term charts will tend to pull back to the ATRs of those charts. So I do watch them. Then on the ADS setups, I keep obviously the line of the sun element, which is potential point of reversal to the ATR. That's an advanced technique that we teach in the seminars. And then here's a potential point of reversal. This is very important. And now, if you're trading long term, this is a very important point for you to keep your eyes on. And then on the SMAs, pullbacks through a small moving average, the slow moving average, and then also on the ATRs, also pay attention to divergence to the ATRs as divergence to the SMA as well. Now, what I do here is, let me show you how I sort my radar screen. I'm asking the radar screen to pull up and sort in order. I want the ATRs to move to the top on the ATR, and then ask him to sort also by the SMA divisional test. Divisional test means this notification you see here, and then also give me gap ups and gap down bars. So automatically, the way it's set up, when I load it, everything that meets a requirement will go to the top of the screen. I don't have to sort down and order them in any particular way. So I'm gonna look these up first. These are the stocks that I'm gonna look at first. They're showing me this test information. Also the line of the sun, I pay attention as well, and the gap ups and gap down plays. You can see here that all of these stocks gap up during the day, and here's the one that gap down. And I go and check those. And that's basically I do have it for the daily, for the weekly. I also do the same. And then on the 240 minutes, if I want to find something in between that I want to give me an entry point, I also do, on the monthly, weekly, and the daily. I had on the 240 minute, but it was too much information for the radar screen. So I kept it very simple. That's part of my research. Anything that goes on top, I start looking at it and pay attention. But definitely the most important tool that I find from THD is definitely ADX. ADX is, for me, my lifeline. I pay a high attention to the ADX in every market I trade. That's oversold, overbought position, and then you know what's going to happen when you have a high ADX value. It's going to pull back and bounce from either ATR or on the other ones on the SMA in this particular case.
The ADX is by far one of our best tools because it tells you what price is going to do.
Exactly.
It's very predictive.
So then, what I do with the radar screen, I go ahead and I check every stock that I see in the radar screen, and if now let me be clear, you might have, for example, a short divergence here, and let's say I pull the stock, and the stock is choppy, I discard it. I don't put it in my watch list. It's there. I know what it's look like. I go to the next one. So go down to the next one here, AAP. See, long divergence. Let's see what the chart looks like. Same situation. Do I want to trade it? No, I don't want to trade it. Even though you had an entry point here, that doesn't mean I'm going to enter it. I don't like the way chart looks. So I go into the next chart. It's over here. Let's go low. Long divergence. Let's see what the trade does. Same situation. No good chart. Go to the next chart down. This one here give me a gap up. Let's go what it looks like. A little better. Does it mean that I'm gonna enter it? No. I wanna go back and I wanna see what it looks like. I wanna see whether the chart makes sense. I wanna see what is the overall potential of the stock. So for example, on the monthly, I will come back and check what is the previous high I ever had. Oh, look here, it's a very important point. The previous here is showing me that the highest that it's been is $26. Guess what I do here? I draw a line. It's a potential resistance point, correct? So now, do I want to go long on this stock? People say yes, maybe, but look at what happened here on the ADX on the monthly, very high, almost close to 80. For me, that's a very negative area to trade and go long in any stock. It can go higher, but do I want to go higher from this point? No, I want to go higher probably somewhere here, not here.
This is one I would wait for the magenta peak. It pulls back to test the ATR, and it cannot flip the ATR. Then, right now, the ATR is sitting at $10.18, okay? So when that pulls back, it's going to be around $10. Right. Now your profit potential is $10 to $26 instead of $18 to $26.
And look here, you're getting a volume divergence already here. So there's probably, this stock is going to eventually break down as well. You have here several ADX picks here for me. And one thing I like about trading with the tools is because I draw lines like madman everywhere. I do not. This is something that I do. And
if they trade with the THD, they should be.
Yeah, exactly. And this is something that I keep staying and I check. Oh, listen, you have a divergence here for me. And I come back and I pay attention to those. This might look good if you're scalping, but if you're looking at a swing trade with this high ADX value, maybe I'm not not too keen to do it. So then I go to the next chart. Let's say this particular one, and then same thing. Now here's something very interesting. Here on this particular chart, on the monthly, which is definitely a downside being traded, moving stock on the monthly chart, probably you're going to have here an ADX that is maybe going to pull the stock back to ATR. Even though the ADX is not high, I think but it bounced off SMA. So this stock might probably bounce back up or continue his trend. But right now, I want to see red before I think of going short
3-minute chart
on the stock. Look at the weekly on this one. So the tool is giving you all of this information. And this is something that if you're a stock trader, you definitely want to bear in mind. You want to be able to use this in your favor. This already took place, of course. And then I go back to the next chart. What else is there that is worth seeing? AGQ. Never seen it before. Let's see what it looks like. This is what I love. Looking, for example, this stock. This stock was once $150+ in worth. You have here potential. And look at what price is right now, $51.02. Can the stock go back to $74? What do you think, Gail? This I do. All the charts that my radar screen pulls me. Now look at what happened here. This stock wants to meet our SMA here. But before it does, my assumption is you're going to have a pullback to ATR on the weekly and resume the direction. I know not until that happens, I will not go long this stock at all. Even though that in the smaller time frame you're getting these bounces, I will not necessarily position myself to go more than 3 days on this stock at the moment for what I'm seeing here. But as a scalper, you had here a trade. Correct?
Yeah. I think it's going to close that gap.
Yeah, I think it will. But if you were trading this, this was on the 31st. Let's look here. Yeah, let's do here, 51.47. Look at that move. How long it took that to happen? 2 days? This is what swing traders look for to trade. You have SMA right here. You have ATR right here. You got the yellow dot. That's a very secure trade to trade. and then you go to the next setup. Let's go down to this one, ANR. It's very small valuable now. This is $5. Let's look something more accessible, BTU.
Cliff, we're not trying to trade today. We're actually trying to teach.
It's an example. It's a beautiful. I like this. I like the way this looks, at least on the monthly chart. You have a strong downtrend, ADS moving. I think when this ADS peaks, and if it bounces from the ATR, you're gonna have this going bright red. At this point, it's not. But you look at the medium time chart, the medium time frames, is giving you, an indication that is the tendency to go downward. So then you do the same. You write your lines, and this we do every day. This is how you come back with a list of what you're willing to trade. So at the end of the day, you just say, you know what, I have pick 3 or 4 stocks that I want to trade, and then basically what you do is you time your entry, and you put them right here, and then you trade. You go to radar screen. You go to your option chain. You see what the stock is trading value is, and then you do that. Looking for example, this is a very good example of an advanced technique. Right here is playing out by itself. Look at the 90-minute chart here, Gail.
Yeah.
I think this gap here, let me see here. This gap may be filled.
Yeah, the gap should be filled unless it finds resistance at the ATR. If it finds resistance at the ATR, it won't close that gap.
Of course, but look price on the 50 minutes. So when I want to time my entry, here's my screen for entry right here. I come here and this is my entry point. My 50 minutes, I switch it to 30, and I use the 90 minutes to entry. This is an advanced technique right here, but this is something that I will probably pay close attention to trade anyway, if I was trading it. But here, you had a trade on the 90 minute, right here, no? So if you're to trade this trade right here, I'm sorry. That's a $2 move right here.
Mm-hmm.
Okay, and this happens every single day. Yeah.
Angel, Bill wants to know what portion of the time are you live trading and what portion of the time are you sim trading?
Actually, I don't sim trade stocks anymore. And what I do is because of my day commitment, what I do is I come back to my radar screen at the end of the night. I look the charts, I select what I want to trade, and the next morning when I come into the market, what I do is when I come to work is depending I wait around 10:15. I check already from the day before. I have an idea what is my option price is being set at the moment. Okay, from my option chain, and then what I do is I place my order from either my laptop or from my cell phone.
Evelyn wants to know, are you buying front month options or do you usually buy more time?
No, depending on the stock, I buy normally I buy at least 3 weeks or more out. All depend on what I'm seeing, because I'm a 3 to 5 day trader, and because the fact the market is a lot of uncertainty going on, I'm not position myself for more than 3 to 5 days in any stock.
David wants to know, how do you get the red dot highs and the blue dot lows on the chart?
That's an advanced seminar, Gil.
Yeah.
Not really. What you do here is you go ahead and you go to Format, Analysis Technique. I'm sorry, this is not the one. No, insert analysis. And then you go here to gap up. Where is it? Where is it? No, sorry. Right here. You go to gap up, gap down. You put in your radar screen, and then what you do here is you go into the indicators itself, and then you adjust the color for the charts. I want
We
to make
don't.
sure.
I think your screen locked up. We didn't see the indicator.
Okay, 1 second here. Summarize technique. You see? You see now? Yeah.
Yeah. I do.
So what you do here, you go to pivot high, and then you select the width of the dot, and then you select the color. And the same one for the other one. Format. You select the color that you want, and that's how you do it. One thing you're going to notice when you do this is you're going to have a pivot high or pivot low almost between 3 to 5 bars. Pivot high or pivot low. Here's 3 bars. 1, 2, 3, 4 bars. One pivot. 1, 2, 3, 4, 5. And then you got another pivot here. And it is a good visual, at least for me, to determine whether we're getting high highs or high lows. Right here we have lower lows forming in the weekly. Right?
Yes. One note I want to make: when you put that indicator on your chart, just remember that it plots late.
3 bars later or more.
Right. Robert wants to know, what is your average win-loss ratio? Our favorite question.
Well, I think that's a very good question. I usually don't like to talk about my win and loss ratio because it all
Well,
depends.
you would have to have your experience for it to even be relevant.
Exactly. And again, you may be a scalper. You can swing trader. It all depends is what you use. I am comfortable with my win-loss ratios. Yes. I'm happy with the result I'm getting. Yes. Does it meet my objective, my business plan? Yes. Does it meet my strategy? Yes.
Well, I'm going to answer it the same way I answer it every other time. Our methodology is based on a 50% win-loss ratio. If you can get 50% and you use the risk to reward ratios that we teach you, then you can make money. It's all based on that. Yes, 1 to 2 risk to reward minimum. Now, if you're longer term trading like Angel does, you could even go down to 40% because you're getting more if you're following the trade, and you can increase your risk to reward. Would I use 1 to 2 on a long-term trade? No, I'd probably go up 1 to 3, 1 to 4.
Right.
Just because you don't have as much noise on those charts as you do on a 3-minute chart. Okay? Does everybody understand that, or do I need to go through risk to reward with you? A 3-minute chart, you're doing 1 to 2. A daily chart that you're staying with a couple of days, a couple of weeks, I could go 1 to 3, 1 to 4, 1 to 5. That's the reason the clipper is so flexible, is to allow you to do that.
And also, you take in consideration that you train options, the percentages that tend to be more favorable than if you train the actual equity because of the delta element.
Right.
Your profitability enhances because of it.
Okay, do we have any other questions today, guys? It's a trade station indicator. It will be later today, Perry. Is that okay? I think Angel did a great job. And this is sort of like a rundown of some of the stuff that we do at the advanced seminar. Okay. It's a very short version.
And we talk about basically about one tool, the beginner's tool. If we go into the advanced settings, I mean, the opportunities are much greater. So we can trade these charts many different ways. We're talking basically about the beginner setup, which is basically for those who are new to trading, who have not succeeded in the past because they didn't have a business plan, they didn't have a strategy what to trade. These tools, this beginner tool will allow you to ease yourself into the process. And I want to let people know that, I mean, what I'm doing now has no comparison to what I was doing years past. Now I'm more confident because I have structure. I'm not second guessing myself into the trades. If the chart is not giving me, the indicators are not giving me the right message based on my business plan, I'm not trading. I'll walk away. And what has allowed me is to reduce my volume of trading. I'm not trading as in the past I was trading almost every day, everything. Now I'm more, because of the tools, it gives me better selection capability based on what I'm seeing and what the tools are providing than in other times. That's an advantage.
Oh.
And if you add to that the low risk entry points, that by itself, you know, says a lot more.
David, the gap up, gap down is a standard indicator in TradeStation. Okay. Riley, does this seminar repeat tomorrow? No, I'm trying every day to give y'all a different view of markets, because the markets, when we say markets, everybody thinks, oh, the ES. Well, everybody knows I don't like the ES, so that's a no-brainer. But also to expose y'all to other markets. You know, I don't just make my money because I trade the euro, and I don't just make money because I trade gold. I make money because I'm a good business owner, and I will take every opportunity that is presented. But I also have the patience to wait for that opportunity to present itself, whether it's in commodity, stocks, options, whatever it is. I don't care. But it's taken the tools, and if you've noticed, if you really know the THD tools, Angel is not using the tools in any different way. Okay? He's just using it on a different market. Okay? Tomorrow, I think we're going to try to do futures. I'm not sure yet, Riley. I'll send out an email later today about it. Okay.
And if anybody has any questions, Gail, you know, maybe, you know, send them an email and I will answer any questions they might have if they want.
Yeah, if you want to send your emails directly to me and I'll forward them to Angel, that will be fine. And my email, of course, is gm@TradersHelpDesk.com. Jeff, the best place to actually get started learning the indicators is the Master the Trade seminar. You know, I can do webinars, I can do videos, but there is nothing that compares with being at a seminar with 2 or 3 people that have been trained in the THD methodology that can not only teach you the material, but also make sure you're applying the material correctly. Because for me to tell you this is a high is one thing. For you to actually be able to take that and apply that is a totally different scenario.
Right.
It's called applying your knowledge. Oh, thank you, Wepper. Okay, does anybody else have any presentations? We will be doing videos. Okay. And Angel will be doing videos, and we will post them on YouTube as well as the website. So we are trying to schedule more seminars, Perry. I think the next one's probably going to be out in California or Oregon. It's probably going to be in February or March.
And I think if you guys sign up for the advanced seminars and you the master the trade, we're going to be going deeper and deeper into the other elements of trading. I mean, the psychological aspect, how you go into the business plan process, and how you get yourself prepared for trading, because there's a preparation process that everybody needs to go through. This is not a platform, it's not an indicator and then push a trigger.
There is a way to think like a trader, and I think we actually have it nailed pat.
It's not pulling the trigger sort of mentality. It's not that easy. I mean, if you do, you're probably going to run out of your account very quickly. So you have to write. You need to prepare yourself for it, according to what kind of trader you want to be. Are you going to be a day trader? You're going to be a swing trader? You're going to be a commodity trader? You're going to be a futures trader?
Yeah.
The fundamentals are the same, but you need to work yourself into this process.
Yeah. Another thing that you have to ask yourself is, in what way will your money work the best for you? For example, everybody knows I trade the euro on a 3-minute chart, but I also trade the euro US dollar on a longer term chart because it works better for me to trade the euro US dollar because of margin requirements. Okay. Are we going to have any advanced seminars in California or Las Vegas? I'm not sure, Frank. We're only doing one advanced seminar a year right now. So if it's only one, we'll probably keep it on the East Coast. If we start doing more than that, yeah, we may expand. But on the advanced seminars, and I haven't said this before, but at the advanced seminar, everybody is there. That means Mika's there, Rick's there, Richard's there, Angel's there, and I'm there. And we cover a huge amount of material at the 5-day workshop. So we may keep that on the East Coast, but it just depends on whether we expand it to more than once a year, Frank. So, okay, any other questions this morning?
Thank you, everyone, for coming. I hope I answered all your questions, and look forward to do this again.
Okay. I do want to thank Angel for taking time out of his schedule to come here and show us all of this.
Anytime.
As I said, he will be presenting in the future, and I will send out announcements. Tomorrow, Rick is going to join us, and then on Thursday, we'll probably have Richard in the room again. Okay? So I hope everyone has a wonderful day. No, we did not record it. A client of mine said that he did, and I may post it. We'll see. All right. Well, thank you, Angel. Thank you all for joining us, and I hope y'all have a wonderful day. Of course, if you have any questions, please let me know at gm@tradershelpdesk.com.
Thank you, everyone. Bye.
All right. Bye-bye. Thank you, Angel.
Thank you, Gail.
The organizer has ended the session, and this call will be disconnected.